Good morning, traders. It is Thursday, the 14th of May, 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. I want to remind you that as you're watching this video, the bottom right corner, there's a little sprocket looking thing. You can click on that and set your resolution to 720p or 1080p for highest clarity. Also maximize the window so you can see the charts. Let's look at the overnight news. The key characteristic today is the large FX movements that we continue to see, also tied with European yields. We'll take a look at a chart of the US dollar here in a minute. European market participation is light today. Several are on a public holiday for Ascension Thursday. U.S. dollar continues its slide lower as dollar price commodities continue to strengthen, mainly crude, gold, and so on. There were promising comments overnight from the Greek finance minister. Greece is starting to see some alignment with its creditors, raising the chance that there's a deal that's in the works. Initial jobless claims in the U.S. came out about a half hour ago, 264,000 versus 273,000. Slightly better. Continuing claims, 2.23 million in line. April PPI final demand, this is the producer price index, came in at negative 0.4, expected at positive 0.1. That's a half a point swing to the downside. This is likely to weigh in on the Fed a little bit. PPI ex food and energy came in at negative 0.2 versus positive 0.1. So that was not expected. Factory orders come in at 9 o'clock. Also at 9 o'clock, ECB's Draghi speaks at central banking lecture held by the IMF in Washington. IMF's Lagarde delivering welcome remarks. Going to be paying attention to that, especially if you're in the euro or European bond stocks. At 9:30, we're looking for EIA natty gas change, expecting 117 billion cubic feet, and then that's it for the economic releases. There's an auction, a 30-year bond auction for 16 billion at noon central. All times are central, so key 9 o'clock for ECB's Draghi and factory orders, 9:30 for natural gas for those who trade that, and noon for the 30-year bond auction if you're in the bonds or trade the yield curve. Let's have a look at our technical picture here. Let's compare what we did yesterday versus what was expected. Those of you who were at the Trader Bite yesterday, recall that the primary hypothesis was for it to open in chop, likely to open in value, right up against the point of control in the close. Point of control, 95 and a quarter. I'm sure you recall this price, a very important price for a while now. Expected to open right there. It actually opened a little bit higher at 2098.75, and then we saw an immediate drive up to 2106.50. The primary hypothesis was chop open, expecting it to push down to 2091 to test the LVN and the cutoff point from Wednesday or from Tuesday's trading, and then eventually push higher with a key target at 2110 and 2111, 2111 being the point of control of these two balance days. What actually happened, so Hypo 1 didn't play out, it played out in reverse. In fact, we got a push early and then chop in the afternoon and a test of 2091.50, just 2 ticks ahead of 2091 on the close. If I was to take this chart and invert it backwards, that was the expectation, just a chop with an upward skew and then a push into 2110. So basically inverted our Hypo 1 here. Um, Looking at what happened on the close, let's take a very close look at how this traded on the close. So as we push down to 2092.75, we see here there's a fair number of opportunities to take the short, looking for the bottom to drop out. Still targeting 2091. Um, Pretty choppy, but still it still worked out. A test of the mid here, retest of the mid, and a push lower. Had to be very, very patient to hold on to this. But overall, on the close, we shifted the point of control down to the low end of the range, thin profile up above, um, and a weak low. So if we look at this low at 2091.50, tested over and over and over with very, very little going off, um, very little rotation happening on the close. This had all the hallmarks of a continuation lower, an auction that is incomplete, again, a weak low at the close. This traditionally has a high probability of breaking lower, at least in the overnight session before it tests higher. However, the overnight session went completely sideways, tried to test lower into 2092, but on the European Open we had significant strength, taking us back through the thin part of yesterday's profile and pushing higher. One of the things I said yesterday at the on the Trader Bite is that I'm seeing significant strength here in the way that Tuesday finished, and the expectation is for this to go higher. Um, and I still believe that. In fact, the evidence of that is even though the point of control and value of yesterday was inside of the prior day's value, note that it's put in a higher high and a higher low. So even though it did this on the end, it pushed the point of control down at the end of the day. The market was able to defend higher prices and hold value where it was the prior day. This again, I'm still looking to target 2110, 2111, and today it's likely to get those. As far as what to expect this morning, difficult to say because we are all of a sudden putting in a wider balance zone. So at this point, because of the way this yesterday went into this 2-day balance, I have to extend out the MC. And what we end up with is a microcomposite that has two major distributions, with the cutoff point being at 2099.50. Also yesterday, the MC point of control, the big composite here from February 13th all the way to yesterday, again shifted the point of control back down to 2095.50. So again, the point of control has moved down. Again, the market is stuck in the mud here. Very, very deep balance area. The market does not know how to price these things in, all the inputs in, and has nothing new to price in. So it's just churning in the middle of balance. But overall, we find ourselves above the 95.50 with the next large distribution in this area in the 2111. So I have to look at this as a key target and a magnet above. The expected behavior on the open, the expectation is for very small responsive selling back down to the extent of 2100 at most, but the expectation is for actually somebody for the stronger participants to come in and push this through to 2111 fairly quickly this morning. So that's what I'm looking for on the open. Looking for a small responsive, if any, responsive selling trade on the open, but I'm looking for buyers to step in just like we saw yesterday, to step in and push it to 2111 as the key target. Once we get there, the bigger picture then, we have to look at this composite. The bigger picture then becomes the next becomes these highs that we've put in, and essentially we've taken back this small sell-off. We've filled in the gap zone fairly clearly and cleanly. We filled in the gap zone, so the structure below is fairly decent. So I expect that the rotation higher is going to commence today. We'll see how that plays out. One of the things I wanted to show you before I run off, the U.S. dollar. So we're looking at a lot of movement overnight, a lot of movement in treasuries, the Bund, and so on. It's been a heck of a trade in there. You might want to look at it if you have a Eurex feed. But overall, the dollar was on a tear with the euro dropping down to 104 for a bit, with the dollar being as high as it was in March, late March, early April. It made this W formation. You can see it very clearly on this chart. W formation with failure, and so what we have is a market that is failing to sustain these prices and has been trending down. So the euro has been trending up. The euro currently trading around 114, 114.40 or so, 114.07. And that's it's showing significant strength there with the dollar dropping. This is likely the explanation for what crude is doing. Crude is U.S. dollar denominated, and they move in they're inversely correlated. Crude has pulled back given yesterday's excess inventory, has pulled back, but overall it has not lost any ground on the move up. I still believe crude will continue higher, will likely continue higher and into this very, very thin volume zone that we have here all the way up to 78. You can see this thin volume zone continuing all the way up to 78 before we start to see it thicken up where prior volume has occurred. So as long as the dollar keeps holding lower prices and moving lower, I think crude oil is probably going to continue to go higher. It's less of a supply-demand equation there than it is a currency equation. In fact, a lot of our movement these days is currency-based, in my opinion. Anyway, the last thing I wanted to show you is the Euro stocks. For those who trade the Euro stocks, again, this is one of my favorite index products. The Euro stocks still have not come back to test the 3630. I still believe that it's likely to move into that. It is stuck in a balance right now, but it's likely to turn up and test 3630. I'm still looking for that trade to materialize. That's all I had for you for today. Hopefully you gained something from this. I'll talk to you soon. Wish you the best. Take care.